Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're back here on YouTube and we're going to be looking at gold and silver today. We're going to be using the CFDs on gold and the SLV ETF for silver. So, what's going on then? Well, we've had a little bit of a sell-off over the last couple of weeks or few weeks in gold. We've come down from the all-time highs. And we're trying to establish what degree of correction we're in. And if you want a long-term view on gold or silver and you're interested in that kind of stuff, go back to some previous videos on the channel and look at those. Today we're not going to be bothering with that. We're just going to be going straight into the Elliott wave count. So here we are on the primary count. It's a bit messy, but we're going to come down to the smaller time frame here. And we're just going to be looking at everything off of the low from October 2022. So since then, we've got a strong rally to all-time highs. Yeah, we peak at around, we peak at 2790, essentially, almost to the tick. And then now we've started selling off. Now we can see clearly if we just turn the count off for a moment, and we open up our channels folder here, we've got all these various channels, right? All of these things are all in play at all the time. So what we're going to do is we're going to do a little bit of housekeeping here, and we're going to turn off all the ones which are not a major impact upon what we're doing. Which one's that one? I'm going to say main Elliott channel. So these first two are the most important because this basically is all of the price action which has come off of this initial swing high, swing low. And then this is our base channel, and as you can see we move up to the base channel, we break out of it, we back test it for support quite vigorously in this case, several times, and then we launch to the top of this Elliott channel. Now at the moment the Elliott channel, this is an assumption that we've got a wave 3 in place here. I'm placing this larger Elliott wave channel. There is a possibility that this could be a smaller wave degree count, but the way it's shaping up in my mind at the moment is that it's probably a larger wave degree correction that's underway. And the reason I'm thinking that is just this was no small pullback. Yeah, this was a 9% decline in the gold price. And we can see when we just eyeball the chart, which I think sometimes before we get into the Elliott wave count is a good idea, we can see if we just use the polyline to just form our waves here, right, we can see that this here is no small correction. It's no small wave degree. It's not like all of this stuff in here. This is all smaller. So I do feel that something bigger completed up here, and therefore I've adjusted the count to accommodate that. It's possible that it's part of a smaller trend. Maybe we can figure something out for that. I might have a count on the side here that I've been working on, but generally I think a 10% decline from the highs, pretty strong pivot in place. We can consider that that was a major top of some sort. I don't think it's the major top. I think we're still in an upward trend, and I think we will continue higher, but I think we may have some corrective behavior first, something like this perhaps, before we move high. Now we don't have to come down that far, but we might. So if we just delete that for a moment and we bring up the now for primary count and we come back out to the daytime frame just to get rid of all this scruffy noise, so you can see what I'm talking about. Only the smaller time frame counts are visible. Now let's delete that one, don't need that. So essentially what I'm suggesting is that we've had a wave 1 at intermediate degree, a wave 2 at intermediate degree, a wave 3 at intermediate degree, and now wave 4. And the likely place that this will test will be the back edge of the base channel and the edge of the Elliott wave channel, which intersect here perfectly between the 23.6 and the 38.2 retracement targets for a wave 4, which is the fib retracement targets for a wave 4. Now it is possible on the off chance that it was very brief and that it's already over. So it's possible that this low here was the wave 4, but as you can see the time frame difference between this and the wave 2 would look peculiar to say the least. It could be an expansive pattern and actually take significantly longer, so it could do something like this. right? And then that would give us a flat pattern as opposed to this sharp here. It could just be a sharp and not alternate. Alternation is something that's desirable to see, but it doesn't always occur. You know, it's just preferable if it does. So that's essentially what I think we're dealing with here. I think we are... I don't need that minor pivot anymore. I think we're in a wave 4 at intermediate degree. If we swing to a new high, we could be within a B wave, but we will give it the benefit of a doubt that we're continuing to march higher, because we should. You know, if we see 5 off of here and 3 back, we should expect another swing to a new all-time high, or at least back towards the highs. We'll talk about that on the smaller time frame in a moment. So if we take a quick look at just where we've come from with a Fibonacci extension here for a moment. So from the top of the wave 1 to the bottom of the wave 2, and we shift this to a wave 3 extension, we can see that we went beyond the 161.8 target and fell short of a 12618 target, pretty much bang in the middle of the two. So it's definitely big enough and strong enough to be considered a wave 3. Right, now let's come down to the smaller time frame then and see what we've got going on here. So as you can see, it all gets a bit of a mess on this scale. But what we need to do here is we need to just double check the length of the minor 3 within this larger intermediate 3, just to make sure we haven't made a silly error. And we're just going to measure it against the wave 1, and we can see here that the minor 3 was short for a wave 3, but not shorter than the wave 1, so it's perfectly legal. So most of the action actually came in this 5th wave here, the minor 5 of intermediate 3. Now from here we can see what appears to be an impulse down. Okay, exactly how you want to count it is up to you. You could count it as a double zigzag, like I said, the possibility is that it's complete. But 1 2 and then 1 2 3 4, or 1 2 again. I think I'd rather go 3 4 here, or maybe 3 4 down here. I think both are legal since it doesn't overlap, and the 3 won't be the shortest either way, so take your pick really. And then we seem to have come up in an impulse. It looks like an impulse. 1 2 3 4 5 4 minuet. These shorter time frame ideas are always very rough ideas. Okay, I don't put much stock in them. And then we seem to have A down. This all looks like sideways B to me. It'll come down again. In other words, what I'm saying is none of this stuff off of the here looks impulsive. Right, this looks like sideways corrective behavior. So another move down would make sense. Not to new lows though. I wouldn't have thought, because I'm suspecting another move back within the C, and then finally to new lows. Now if we do come to new lows, we can look at this as a single freeway, as a double zigzag instead. So let me throw these into the primary folder, because we are going to get a big mess here if we're not careful, and we're just going to put a separate count up just to suggest that this could be a double zigzag. So we're going to have W, X, and in case we swing to new lows, Y. Right. The reason I think this looks more like A, B, C, C, A, B, C, with an A, B, C in the middle, with a bit lower to come here, is just this looks impulsive and this looks corrective, this bit here, but it could be A, B, C, A, B, C. So we'll have that as an alternate correction, like so, and this would be correcting a minor degree. So we're still in the same long-term count, it's just the more recent price action has taken out the possibility of this having been a smaller wave correction. I think this has to be a larger wave degree correction now, looking at it. A, B and C, and then we can just say alternate, so we'll say STF alternate correction. STF standing for short time frame or small time frame, whichever you prefer to use. So anyway, back to the primary idea. I think we're going to get something resembling, I don't know if that's going to, we'll put the corrective channel there for the moment. If we swing high again, we can anticipate a B wave. Okay, but that B wave has to come in if this is going to be a 5-wave move down into a 5A, B, 5C, whether it finishes in a diagonal or another impulse. We can't start the count with a 5 with a motive structure down unless we're expecting it to be a zigzag. So the count as it is here becomes invalid, and we would have to account for a flat pattern instead. That's 2790 spot 070, and I'll put these in the primary, and then what I'll do, just as a reminder to myself, is I'll say A, B, C for a flat, and I will change this to intermediate, and I'll put this in orange, which is a way I keep track, minor, a way that I keep track of alternate ideas where I don't want to create totally separate counts for, because it's the exact same idea as being a wave 4, but it will form as a flat rather than a zigzag. So if we come back above the invalidation point, then we can look at this orange count instead, and we'll also have well, no, it will have to be this, or it'll be bullish, because the other count would be invalidate at the same point. So pop this into here, come back to that count. Yeah, because that X, obviously if it goes higher, we're on our way to a flat count anyway, so this would invalidate up here as well. Right, so there's the primary count, guys. We are in now, I think we've completed intermediate wave 3. We're now in intermediate wave 4. We've got intermediate wave 5 to come to complete primary 5 of cycle 1, and then an almighty correction will occur on a much larger scale and a much larger time frame. So let's now come out and have a look at some alternate ideas, because there's always alternate ideas. Okay, so the primary count is actually one of the more bearish ones. It assumes that we're coming up to a major cycle wave top, which will then see a huge correction back to primary support, major support. My guess would be somewhere around $2,000. So we'll probably finish somewhere near 3,000, and then we'll lose maybe a third, if not more, of the price. That's just a guess. But it is based on there being some pretty hefty support around $2,000. But we have got two other alternate counts which are more bullish. So we've got this idea, which is that we are in a gigantic extension, absolutely gigantic, where we've got 1 and 2 at a grand supercycle degree, you know, from the 1980 into the year 2000, and then we have a supercycle degree correction here, which was basically the GFC, the climb from the GFC into the fallout of the GFC down to 2016. Then we've had a cycle wave degree correction, then a primary wave degree correction, then an intermediate wave degree correction, and now we're off and running. So what we could probably still call for an intermediate 3 to be coming in where we are. That still fits. It's a possibility. We don't appear to have a clear 5-wave structure into here though. Alright, so that could be 1-2 again, but then this being 1-2 again is becoming less and less likely, as this does elicit the behaviour of a wave 3. So perhaps it would be better to move it out of the way and suggest that the primary 3 of this count is coming in here, and this will be the primary 4. That links up with our current count, okay? But then what it means is that we have a primary 5th to come into an intermediate 3, into a cycle 3, then cycle 4 will come back into wave 4 primary degree territory, so we won't have that huge sell off down to 2,000, because we'll be coming back into this price territory between 2,800 essentially, or 2,780, something like that, down to maybe 24, 25. Okay, and then that would come into here, then we'd have a cycle wave 5 run up, and this would complete super cycle 3. So as you can see, this is extremely bullish. And it's not without its supportive structures either. You know, there's an argument to suggest that there's a way we can keep progressing this bull market for a very long time yet. Okay, and continue higher and higher. Now if we just come into log for a minute, there's that pitchfork. Now here's the same pitchfork I was just looking at in log. Sorry, that's the wrong one. No, that goes with the other count. Excuse me. What I'm going to do then is I'm going to take the opportunity to add one now. Taking this pivot into account. Bear with me. That one there, I think. How's that look? Yeah, that makes sense. So we'll take that one and we'll put this into here. So as I was saying, there's an argument for all of these counts that there's geometry to support the market continuing to progress inside of each of these pivots. So this is the cycle degree pivot, there's one at super cycle, there's one at grand super cycle, and they all contain the price neatly as we march higher. So that's one idea. The next idea is that we're in a primary wave 3 now, completing intermediate 4. So this is very similar to our primary count, but in our primary count, let me just refresh because I don't think I showed you it this far back. We've already done wave 4 at primary degree in our primary count, and now we're in wave 5. This alternate idea is more bullish, not as bullish as that, but it's more bullish than our primary count, which suggests that we've done only primary 2, not primary 4. In our primary count, this is 1, 2, this is 3, 4. In this count, this is 1 into 2, and now we're in the 3. So once again, coming all the way back to the top of wave 1 with a primary wave 4, extremely unlikely. We're expecting an intermediate wave 4 to come in to find an intermediate find, which will then find the primary wave 3, which will then find the primary wave 4, which will come back into intermediate wave 4. So very similar, different long-term outcome, but very similar to the other alternate count. So actually the primary count at the moment is the one which suggests the most bearish ending, which is the completion of cycle wave 1 within super cycle 3, and then a very significant correction back. And I think the obvious places once that's over is, my bet would be on 20.075 spot 219 as the first support we'd encounter. I don't think it would hold, even though there's all-time high, all-time high, all-time high all along here. I think we'd want to breach this, come into some much thicker volume here, in amongst all this noise, and then we'd find a way higher. So we'll see how the primary count progresses. We've still got wave 4 to complete at larger wave degree, and then a large wave 5 up. Wave 5s are more likely to be extended, and the 3, although strong, is not extremely strong, so wave 5 could be an extended wave itself, which is quite common in commodity markets. So the 5 could blow up, and then as we approach this 5th and final wave on our way to 3,000 and above, I think we need to start getting more and more cautious about what's going on. Because we know about the subsequent pullback in either of our two alternate counts, we know that once this is done, we are either going to pull back into this territory here, because this will be the larger wave 4, right, or we're going to fall through it. If we fall through it, it's far more likely we completed a larger top and we're coming all the way back. Right, so we'd be looking for support. Once we get through this resistance and the all-time high, this all becomes support. When we finally get a top in place and we start to sell off, if we start to sell off, that are our alternative ideas, but if we were to start to sell off, we'd be looking for support back in that prior wave 4 first and looking to find a low. Then we'd be looking for an impulsive move off of a low. Then we'd be looking to see whether that becomes a zigzag or a 5-wave structure at smaller wave degrees before we start to rebuild the idea that we're coming off of that low bullishly rather than building a zigzag down. All of that's off in the future. We can worry about that later. In the meantime, to sum up, we are in a very strong uptrend which continues. We are temporarily correcting sideways. Okay, we may come down a bit deeper. This wave 4 might want to check into this wave 4. That's very common behavior before pushing higher. So you have a wave 1 into a wave 2. You have a 1, 2, 3, 4, 5 into a wave 3. You have a wave 4 which comes back into prior wave 4 price territory. You complete into a wave 5. That's either a 3 into a 4 which completes in prior wave 4 territory. That goes into a 5. That completes into prior. And that's what the alternate count suggests. Whereas the primary count simply says 1, 2, 3. We're now in the 4, 5, and we're done. And then it's a big sell-off. And that's the simplest way I can sum it up. So that's gold from an Elliott wave point of view. Is there anything else I want to discuss? Primary count channels. No, not really. We're expecting this to pull back into prior wave territory. So all I'll do then is we've got our target box of 23.6 to 38.2. Right, we've already come through the 28.6 and we can see that the wave 4 extends beyond the 38.2 towards the 50, but not quite. I would expect to see the price settle somewhere in here. I know that's not excellent extremely accurate. But what we'll do is we'll throw a fixed range volume profile in here. Oh, we can't, can we, on the day time frame on the CFDs? Sorry. We could do it on the 8 hour. I don't know why. Don't ask me. I don't understand why. Okay. It's just the way the chart works. There's no volume on the day time frame. I don't know. Whatever. Either way, so as you can see, here's the bottom of that. Here's the top of that. Around the 38.2. High volume node here. Lots of price territory and support. That's essentially going to operate as a target / demand zone, essentially. So as we come down into here, if we come lower to complete a larger wave 4 into this territory, I'd expect a bounce from there. I would also expect it to respect the base channel. Okay, here's come off of log, and here's the base channel. Top of the base channel's right in that volume node, right around the 38.2. So I'll put a little polygon on to remind us. I'm expecting something like this. No guarantees though. If we rocket off to new all-time highs, we have to come back and assume the 4's in, and that it was very brief and we're now marching off in the 5. So I'll throw all of this into the primary folders. And now we will have a look at some classical analysis on gold, and then we'll come over and do our analysis for silver. So out to the daily time frame, and we'll start with our exponential moving averages. So we've come back to the 60 exponential moving average. Now traditionally, as I often point out in all of my videos, if you're new to the channel you might not be aware of this, if you're a member on the Patreon you will be, we've talked about this many times. Larger wave degrees correct through larger longer term exponential moving averages. So we can see here this huge correction went slicing all the way through the 10, 20, 60, 250, dragged them all into a downward bearish state. Okay, the next wave degree made its way through the 60, the 10, 20, 60 and 250 exponential moving averages, but it couldn't roll the 250 over into a bearish state. It kept going up while the others all went down. The next wave degree found its way through the 10, the 20 and the 60, but couldn't reverse the 60. And then the wave degrees which are the same came back to the 60 and less when they're at smaller wave degrees. You see what I'm saying? Only through the 10 and 20 but couldn't flip them. And then we've had the first time through the 60. This suggests, this is how one of the things which helps me count fib extensions, price action combined with how it interacts with these moving averages over time, suggests that this correction is the same as this and this. It's all the same wave degree. Alright, and therefore if this is a top, it's corresponding with this larger correction back here, which is the last time we came down, and the move down into the prior wave 4 would bring us into contact with the 250, which this prior wave degree did as well. So we are running very smoothly as one would expect at the moment, but we are expecting further sell-off, further weakness in gold. Now let's have a look at our indicators, shall we? So on the daily time frame first. So we had bearish divergence building up on the MACD, which we pointed out, lower highs, and then higher highs in price, and then that was the peak here, essentially between these two highs here. So this corresponds with the RSI bearish divergence building up. And for some reason it doesn't want that on the chart, so we will just adjust it to be on all intervals. Okay, and we can see that is associated with this bearish divergence across multiple lower highs in the RSI, lower highs in the MACD, higher highs in price, predicting, as I often point out, this is bearish divergence between the previous high and current price until we have a pivot in place. We got a pivot in place. Here's a bearish engulfing candle which gobbles up all of the prior day's action. That's a pivot. Back to support, right? Hold that support, break down. Confirmation of that being a pivot. But that's the first thing you're looking for. You're looking for a reversal candle. Big bearish engulfing candle, a shooting star. You're looking for confirmation of this divergence playing out and a shift of momentum on a smaller time frame. All of those things occurred. We have a pivot in place. Down we come. Swing low, lower high. Stands to reason now a lower low. Right. 3-wave zigzag. But we could get a flat. Like that, 535. It's also possible. Depends whether we get a new price extreme in the V wave or not. So there we go. We had some bearish divergence building up on the weekly time frame. It was all strength into the highs. It's all strength into the highs. So MACD no divergence, RSI no divergence, came back to neutral here. We might be looking for oversold. But we've done enough already to reset on the weekly time frame for the wave degree we think we're in, but it could come a lot deeper. Came back to the 20 exponential moving average just as the prior wave degree. Here the 1 and the 2 did. This is the 3 and the 4 we're doing. We may have to come down deeper, but for the moment we technically look like we've done enough. We'll see. We did come back to the 23.6, but we'll see. Alright then, so no long-term weakness here, so no sign that we put in a major top. What I would be looking for is, as we come back up on the weekly time frame, that there would be divergence between these prior highs and the same in the RSI. I would expect this next weekly RSI reading when we get the 5th to be weaker, unless we get a blow off in the 5th like an extension support with a strong push from volume. But generally there's divergence on the larger time frame. Monthly time frame, just off the charts, crazy, nuts. Some of the most vigorous momentum we've ever seen in the history of the in the history of the gold market. On the MACD here, this move into all-time high, so stupidly overbought. But then that's what happens when we're in these extremely bullish stages. Starting to slow off now, starting to cool down. Like I said, I would look for weekly divergence to find the top of the 5th, and I would expect us to be in a weakened state by the time we do it on the monthly time frame, because I think all of the strength and all of the force was in that completed wave 3 up here. Alright, and that is gold. Let's come over to silver now then. So silver count is a million miles behind gold. No all-time high here, I'm afraid. The all-time high of 2011 of roughly $48 is still untouched, and we continue to build the means to break it, but no sign of doing it. You know, we haven't done it. We keep building the means to do it. We have this base channel. We're still inside of it, so technically we should be labeling it a corrective channel, because this could just be A, B, C. One would expect to move at least back to the high of the channel. We haven't even been able to pull that off yet. We're just stacking overlapping price action. So we're either going to come chasing gold after gold's on its way into its peak, or even after. It wouldn't be the first time that's happened, that silver races up after gold. You know, people look around for what they can afford to buy. They can't buy gold because it's on the moon. They realise that silver can still be purchased at a discount. I wish that was true physically, but the premiums, it is not true. It's only true from a spot point of view on paper, which is not ideal. But either way, 1 into 2, 1 into 2, 1 into 2, 1 into 2. It's an extension. We have primary degree, intermediate degree, minor degree, minute degree. So this is not the same as what's happening in gold. Evidently, that's true. We are overlapping at the start rather than at the end. And if we come back below 24.25, this is wrong. This is not another smaller wave degree. Let's come into the smaller time frame so you can see them. Minuet waves, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So here's the minor wave 1 into minor wave 2, which is 79 days in length the correction was. With using that as a guideline, I don't really want to see the wave 2 go longer than 79 days in length. If this goes longer than this, then this is bigger than its parent and things start to get less likely. Not impossible, it does happen, but it's just less likely. If it comes back through 24.25, then it's wrong. Okay, so that's what I'm using as my cutoff at the moment. $24 spot 25 is a major support level. Major support level. Right? It's these highs, these lows being back tested. If we breach the bottom of that wave 1 and we come back through that 24.25, we're heading for 23.87, which is that major support level, and then we're into a different count at that point. And I would argue that the best idea we've got is this one, that we are in an extension, but it's 1 into 2, and instead of 1 2 1 2 1 2, the 1 2 to this intermediate degree hasn't happened yet. So it's 1 into 2. This is 5 into 1 into 2. And then we're off looking for the top of that channel, which will break out in the minor 3. Okay, which will back test in the minor 4. And then we'll press off into the intermediate 3 for the minor 5. And then the 4 and the 5 and so on and so forth. And we'll rush to catch up to new all-time highs to try and chase down gold. Obviously never going to chase down the price of gold, but you know what I'm saying, to chase down the price action of gold and actually make new all-time highs. It's all got to happen yet though, and as you can see, silver's just being very reluctant to play ball. But yeah, we could label this 1 into 2 primary, 1 into 2 into 1 into 2 intermediate here rather than minor. I've just, you know, since it's a different count, I might as well use a different wave degree. So 1 into 2 at intermediate, 1 into 2 at minor. This is a really shit looking impulse, if I'm absolutely honest with you. I mean, it's legal, but it's crap. You know, the 3 is really lackluster. The 4 is extremely deep. And the 5 doesn't make up for any of the loss. The 5 doesn't make up for any of the failed achievements of 3 or 1. So it just doesn't feel like a commodities market impulse at all. It feels more like a big... It's either an extension, 1, 2, 1, 2, 1, 2, or it's a bunch of corrective jank. You know, so it's why this is the alternate, because it's just such a shitty looking impulse. Structurally, it's not terrible. It just doesn't feel like an impulse, you know. It just feels like more like a sideways correction that accidentally went up, if you know what I mean. But either way, there's my 2 counts. So primary, we've gone 1 into 2 at primary, 1 into 2 at intermediate, 1 into 2 at minor, 1 into 2 at minute, and it's rocket ship time within the next few weeks, right? Because we're going to have 1 into 2 at minuet degree, 1 degree below minute, and then it's 3 at minuet, 3 at minute, 3 at minor, 3 at intermediate, 3 at primary, off to new all-time highs with all that momentum behind us, no problem. If that turns out to be the case, $48 will go like it's not even there, or slice through it like butter. We'll be back testing with the wave 4s on the way up. Obviously, we'll have some volatility and some corrections, but we'll be on a rocket ship for silver. If that's not the case, if we come back through 24.25, I'm going to flip over to the alternate count here, which is that this is a larger 1 and a larger 2. If we invalidate all of this and come back below 16.21, I will be looking at premiums in the physical market if that happens, and hoping I can actually get my hands on some stuff. But if that does happen, we have to slip over to a bearish count, and that's a real monster of a count, right? It does have some pretty nice, you know, it does have some pretty nice Fibonacci relationships going on, though, I'll give you that. But the disproportionate scale is ludicrous. So this is the A wave here, and then this is the B. You know, I'm not saying you can't have massive B waves, right? But come on, that's crazy. We came up here in a flash. All of this is corrective just to put in a C wave, which is then going to go up here. Or all of that was a wave 2. I've gone A, right, to B, but all of this could be 1, and this was a gigantic wave 2. So it's not really any help to us, is it? Because so much has got to break down before we get to this. But this would be target to target. We came pretty much bang to it. Now we'd come all the way down to here. And then if this were to take out the all-time low, then this is wrong as well. So I'm not even going to bother worrying about that in the meantime. So let's run through them. We have a wave 3 extension, which is now at minute degree, and it has to finish before 24.25, and preferably finish within 79 days. The next count is that we've completed a minor wave 1, and this has to complete before 16.21. Don't worry about time frame. This is its parent over here, the intermediate degree. We've got 762 days to get that done, so I wouldn't worry about that. So it's more about price. Get it in before 16.21, preferably holding the base channel. We don't really, I mean, we can breach the base channel, but I wouldn't expect us to. I'd more likely breach the channel, original pitchfork than I would a mod shift or a base channel. Here's the 61.8, back at the base channel, golden ratio, right? Down we come. ABC, and then off we go into the wild blue yonder. Alright, and that's the idea of completing this account here. I'll add this into here because I like the look of all that stuff. And then finally, there's the super duper bearish count of this has all been A, this has all been B, and this will be 5 waves down in C. And we'll worry about that if everything else breaks down. But honestly, I couldn't care less, because if this happens, and we'd even take out the all-time low, and I've gone back to the opportunity of buying silver at an insane gold to silver ratio below $13. Fuck it, I'll do that. I'll even pay the premiums on that one. I just won't pay them here. Alright then guys, that's my analysis for Elliott wave for silver. Let's have a quick look at the picture on the classical analysis and then we'll wrap things up. Say it's going to be a quick video and I still waffle like an old fogey. What have we got here? So we're above the 250-day exponential moving average. We're currently above the 10 and the 20 and the 60 as of yesterday's close. We'll see what we do today. So still in a obviously bullish uptrend. All moving averages pointing higher. None of the wave degree corrections since the larger wave degree correction all the way back here been able to flip the 250 negative. It's been creeping higher ever since. So longer term we're bullish and bullish momentum is still with us. On that note though, the RSI showed no weakness into the highs. Neither did the MACD. Longer term weakness, but we'll be looking for that on the weekly chart rather than the day chart. Don't need that anymore, whatever that is. Let's just have a look at that as a rough guide. Pop that there. Okay, weekly time frame. So we had bearish divergence on the weekly time frame. That's what we said we need to be looking for that longer term pivot. Higher highs, lower highs in the RSI, higher highs, lower highs in the MACD. Exactly what we saw in gold, heralding this correction that we're now currently in. So it's all down to whether we clear the prior low or whether we rally before it. If we rally before it, we can continue the extension count higher. If we break those levels, it's more likely a deeper correction we have to face. And that is, gold's going to be playing a part in that as well, depending on what gold does. A lot of money flowing out into other markets at the moment, which I'm sure some of you have noticed. And many of us have been beneficiaries of. So, but it's all cycles, it's all swings and roundabouts. What goes away comes back. What goes away today comes back tomorrow. You know, but either way. Bearish div is playing out. How deep is it going to play out? We have to wait and see if those levels break. There really is nothing else to talk about here. So I'm going to wrap things up. Right guys, thank you very much for joining me on this technical analysis of gold and silver. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're interested in learning Elliott Wave for yourself, getting access to a public Discord with loads of interesting channels and good members who want to chat about things, and you want to get access to educational videos and exclusive content each week and weekly live streams and a bunch of other stuff, then feel free to sign up. There's a link in the Patreon. There's a link for the Patreon in the description box below. And if you're not following me on Twitter, please do so. I occasionally remember to actually post on there. So, alright guys, take care of yourselves. I'll be back with you as soon as possible. All the best. Bye bye.